Hi, everybody. Jeff Yasteen here, and welcome back to another Market Insight. And this week, Brian Christopher, editor of The Profit Line, and my colleague and friend, he joins us. So, Brian, welcome.
Hey, Jeff. Great to see you.
So let's think through to the week ahead. Number one, we've kind of left. It seems, and the market has certainly appeared to have left the whole Iran tensions situation behind. Obviously, we saw volatility last week, and barring further developments, it looks like the market has sort of left that in the dust based on the gains we saw last week.
That's true, Jeff. But personally, I wouldn't be surprised to see some flare up in tension from time to time. Like, I don't think this U.S.-Iran volatility is totally gone away. I just think it's it's been put to the side for the moment.
Yeah, I would agree with you on that. So looking forward then, I guess this phase one U.S. Trump administration China trade deal is the main thing that we're all going to look forward to here over the next handful of days, I guess.
That's right. China is sending some of its main people here next week for that signing, which I believe is scheduled for the 15th, and that's a good sign. It's a serious event, obviously. It's been a lot of months in the making, so it is a positive to see this happening.
And I would agree, and I think this is what the market has been anticipating, I believe, right, for many months now, is a trade deal, or at least the beginnings of one. Let's put it that way. There are still other parts to negotiate, and I presume and would say to everybody else that don't be surprised. I've been calling for a correction. I don't know, after we got that Iran situation last week, an immediate rebound, if we'll ever really see that correction.
That's right.
But there's that usual sort of buy the rumor, sell the news sort of aspect to the market. So it wouldn't surprise me that once President Trump and is it President Xi, I guess, signing this thing in the coming week, that we see a bit of a sell-off, but that sell-off may not come. And people are obviously very, very bullish here, and perhaps the market will just move higher in anticipation of the next phase of the trade negotiations coming to some sort of completion in the quarters or months or quarters ahead.
That's right. But the buying the rumor and selling the news is a common concept in this market, of course, that to some extent defies logic, but it is what it is. That's what happens. I mean, again, this phase one's been priced in, and so I wouldn't be surprised to see a little bit of a down clip initially. I'm not saying it continues, but that's just what tends to happen when these events come to fruition.
Yeah, Brian, I've gotten emails from people who've asked about this situation from time to time, and like you have said, in some ways it's hard to process as far as how can the market continue to head higher here. And obviously when the market gets a sort of a bullish head of steam on it, it really doesn't matter any more than it mattered in 2009, when the market just kept moving lower and lower and lower until it finally bottomed, even though in some ways it was a viable market days and weeks and months earlier. It's just, that's part of human emotion. But the thing I think people need to remember here on this China-U.S. trade deal is that once this trade deal is signed, in many ways that it gives the all clear for the rest of the global markets to sort of go in and start buying equities, because once this deal is signed, it sort of removes at least a big chunk of uncertainty from the global trade situation. Now companies can sort of set out and make the proper investments for their own global supply chains based on whatever's in the trade deal. And that sort of opens up the floodgates for a lot more investing, for basically a lot more investors to come off the sidelines. Maybe they shouldn't have been waiting this long for the actual signing, but as you know, and I know, especially when it comes to Wall Street institutions, that's often what happens. They want certainty, and this is the certainty that they've been waiting for.
Yes. Yeah. And a couple of things with that. One, with respect to the stocks that will do well, I wouldn't be surprised, and I think you've commented on this before, to see some emerging market outperformance compared to the U.S. because that's really where the investment has been held up, right? Is outside this country. And then the other thing is, I was actually looking at the money market. So the money on the sidelines, the money market fund balances are still rising. They were the last I saw, as of, I think it was dated as of December 25th, more than 3.6 trillion. And if you look at the chart, it's just like it's still kind of a steady clip upward. So there's powder to be invested. There's no doubt.
Absolutely, and that provides fuel or potential fuel for the market to move higher. And one thing I'll add to that, one thing that's been driving the market over the past week, and obviously for weeks and months before this point, is Apple. I was looking on Friday, it's now a 1.3, close to a $1.4 trillion market cap company. And in institutions, again, they love certainty, so you can't really go wrong buying Apple, because to me, Apple's now like what IBM was 20 years ago. Nobody ever got fired buying IBM stock. Nowadays, nobody ever gets fired buying Apple stock, if you're an institutional fund manager. But at some point, as that stock goes up and up, because it is going parabolic, money will rotate out of that. And as you were saying, I would suggest people look at emerging markets, and I've recommended the EEM, Emerging Market Index ETF, numerous times. I think that's a great place to put some money as we sort of examine the U.S. market versus the valuations, the cheaper valuations elsewhere. So, Brian,
and also to support that, Jeff, China just had just announced a little bit more stimulus in terms of reducing the reserve requirements in their banking system today, I believe. So that helps too.
Just adds more gasoline. So, looking then also to another development in the coming weeks. The coming week is earnings. So this is really sort of the start in many ways of the core part of earnings season. You're watching this very intently. What are you seeing out there? What should people pay attention to as the key earnings reports that may influence the market and investing decisions going forward?
Well, just recently, this is a little bit of past news, I guess, but we've seen some of our retailers, and they released less than stellar earnings. But when we're talking about the companies that came from, we're talking about JCPenney, we're talking about Nordstrom, we're talking about Macy's. To some extent, the market anticipated their difficulties anyway. Kohl's a little bit less so. Kohl's reported a reduction in holiday sales, which was not expected. But that's still just a solid name. So I am happy. I want to see how they're going to bounce back from this. With respect to next week, we've got a lot of the big time financials reporting. So our big banks, our JP Morgans, that'll be a good indication of where this economy is going. I still, housing pretty strong with these lower rates. We have seen some prices fall in certain places, but banks, they're not quite as worried about the prices because they're getting paid from doing mortgages, right? And
Brian, the typical thing on any sort of strong market rally is that it has typically been led, or one of the leading groups, one of the leading sectors within a broad market rally is usually financials. The idea is you can't have a sustainable rally unless financials are participating, or at least not going in the other direction. Let's put it that way. And so for me, that's what I'll be taking out of the banking stocks as they report earnings, is basically just a confirmation and looking at the reaction in the stocks. The other thing I think people should just keep in mind is that because we've been in this sort of period of surging market prices, surging share prices, and I'm seeing this in some of the stocks in my Total Wealth Insider portfolio, as they come out with preliminary results on their numbers, on their quarterly or annual numbers, I'm starting to see some where the market has sort of done this knee-jerk selling. And quite often in this sort of environment, you want to buy weakness. You want to buy that kind of weakness in individual stocks reporting good results, because that's just traders again, it goes back to what we were saying earlier, buy the rumor, sell the news. And so when we're in this sort of environment, traders, you need to keep their mindset in your mind, and you can use that weakness as a chance to get in on these stocks that they threw away. And then, 2, 3, 4 months later, you'll likely be rewarded with higher share prices.
Yeah, those are gifts. The trend is higher. And if a company reports earnings that's 1 cent short of estimates, it's really not the end of the world. And in my mind, it's still an indication that that things are positive, even if we didn't quite reach the estimates.
Right, exactly.
It's more often than not a buying opportunity.
We are at a point here, and I don't want to sound like a Super Bowl. It's just that we're at this point where oil prices, they're still, modest by historical standards. Interest rates have come down a bit because of the Fed's actions last week. And I think the assumption is the market, by the stock market, is that the Fed is on the sidelines through the November presidential elections. And that just provides a beneficial backdrop for people to get excited about the stock market. But as you and I often talk, the key is not to get carried away in your enthusiasm. Don't buy too much, and just be aware that there's always risk in the market. So, Brian, final thoughts along those lines, perhaps?
Just based on what you were saying toward the end of the year, I couldn't resist but to recommend some names in the energy space, because they got just so hated. And thus far, that was the right call. It's been a volatile call, especially with this activities in Iran. But that is one area that I still think is inexpensive.
Yeah, I would agree 100% on that. Well, Brian, thank you for coming on to Market Insights and sharing your ideas here going forward and what we should all be thinking about for the week.
All right. Thank you, Jeff.
And for all of us here, appreciate you watching Market Insight. Make sure to watch next week's edition. I'm Jeff Yasteen, wishing you the best of good buys.